You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Well, let's find out together. It is time for Volatility Views. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-engaging, at least we tend to think so, Options Insider Radio Network. I want to thank all of you out there who take the time out of your busy day to A, listen, and B, if you like what you hear, do keep rating and reviewing. This show has been going for over a decade. So we have quite the back catalog of reviews, but the algorithm always likes the new stuff and new people discovering the show all the time, thanks in no small part to your efforts out there. So if you do like what you hear, do keep rating and reviewing on your platform of choice. It's available pretty much everywhere. If for some reason there's a platform that is not on that you want to listen to it on, hit us up, let us know. We're always looking to expand it even further out there. And speaking of expanding things further, if you want to expand your listening horizons, you want your broadcast week to continue beyond Volatility Views, then you want to check out theoptionsinsider.com/pro. You can keep going. You can keep party rocking with us here on the network after Vol Views with Options Oddities. Of course, you get great pro Q&As. We just had Scott Nations on very recently, the creator of VolQ, here in our pro Q&A hot seats, as well as most of the other leading minds in the world of options and derivatives. You get to pick their brains over there, as well as, of course, great giveaways. Congratulations to our pro member Stegosaurus. He won the Pro Trading Crate for the month of February. Of course, live access to this, everything else we do here. So if you want to heckle the Rock Lobster or the Meatball, anybody else here on the show live, only one way to do it. theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us on the old Volatility Views panel today. First, let's go out to the dark, the stormy shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to Volatility Views, sir.
Wow, it is. I'm only here sporadically because Mark just covets this showtime because he just He just gets to talk about volatility the whole time.
It is a fun and relatively unique show. Not many other shows doing what this one's doing, if any.
There is not. So I'm quite happy to be here, and I will stay quiet about the mystery guest this time.
Okay, yes. Spoilers. You gave all the spoilers yesterday, because joining us today in the old NASDAQ hot seat, Mr. Kevin Davitt, the head of NASDAQ Index Options Content. Kevin, welcome back to Volatility Views. It's a trifecta, 3 in a row now, sir. It's a streak. It's a record.
It is, and I don't want to be considered the mystery guest anymore when you go back to back, like the Lakers and the Bulls? No, just the Bulls. That's right. You're not a mystery guest. You're expected to.
You're like Oprah back in the day. She somehow had an unbroken string of cover of her own magazine, right? Like, you're the guy now. That's it. So everyone can expect Kevin on Vol Views going forward as we keep going forward right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a vol trading and trending and analysis and unusual activity perspective. And man, we're getting a lot of green back on the old screen today after a week where we were mostly getting sucked down. And if not that, we were kind of vacillating around the 39.5 to 4,000 level out there today. Roaring back to life out there a little bit. S&P up over 50 handles as we're kicking off the show. We're up about 1.35%. The Dow, which has been the laggard for most of these last few weeks, in fact, it briefly turned red on the year out there. I think today's move should undo that out there. But the Dow up nearly 1%, about 0.9%, and the NASDAQ up about 1.7%. So the NASDAQ leading the charge once again, this time to the upside. All of this green on the screen heading into the weekend means vol taking a nice, relaxing sojourn to the dark side. VIX cash down a whopping 3.6 handles when we kicked off the show, at about an 1860 when we commenced operations over here. So well shy of that 20 handle. Not looking great for my crystal ball pick, I'm not going to lie, but we got time. We got time for things to pop off here during the show, get us back to a closer level for my vol pick. We also got VVIX at about a 75, down a whopping 12 handles. VVIX looking like it has no cares left in the world at this point. We used to say on a regular non-post-pandemic, non-crazy markets time, back, let's say, a decade ago on this show, when VVIX got down to around a 75, we would always say, that's kind of low. That's usually at the bottom of its effective range or pretty close to it. Chances are it's probably not going to hang out there for long. And that was back in normal markets. These days, all bets are off. But if past is prologue, probably not going to be hanging out at a 75 for too much longer. But we shall see. Now that I've said that, we'll be hanging out in the 70s for a month. And then, of course, Vol Q, a.k.a. the at-the-money vol of the NASDAQ 100. No skew here. Straight at-the-money vol. 23.35 when we kicked off the show, down about 3.25 points from where we were this time last week. All right, a lot to unpack. Let's start in the old NASDAQ hot seat. Kevin, a crazy week, a lot of vacillating for the most part until today, where we're starting to see a little bit of upside out there on the screen, a little bit of downside in the vol market. What was catching your eye out there this week, sir?
I think one of the points I made last week was that this feels like a trading market as opposed to a trending or investing market. And I continue to feel that way. The point you made a minute ago about, the Dow being the laggard, it in some ways this year looks like a bit of the opposite of 2022. So thus far, you do see the NASDAQ 100 leading as far as the major equity indices are concerned, and the Dow pulling up the rear with the S&Ps and the small caps in between. I wish I knew whether that would continue throughout the year, but I don't. It was kind of the complete opposite last year. And then beyond that, like big picture, what I see is realized volatility levels for these same indices at the lowest levels in quite some time. One other big picture point is that the spread between the MOVE index, so kind of like the VIX for bonds, and measures like the VIX index or VOLQ has become very wide again. And that gives me some pause about the prospect for a continued rally in the face of higher yields.
Are you a big MOVE index guy? We talked about it once or twice or many times here on the show, but it's been a while. Some people love it. Some people not so much. You're a big MOVE index guy, Kevin?
It feels like we're in a different paradigm now where rates matter far more than they did for the past 10, 15 years. And so I think it would be a mistake to not have it on your radar. And when you have the MOVE index back up in the ballpark 140 range, that does capture my attention. So yes, I would say I am a MOVE index guy again.
Again, they lured you back in. Everybody's talking about Roe now. Rates are hot again, so it makes sense. If you're not familiar with listeners, it is the Merrill Lynch option volatility estimate, a.k.a. the MOVE index. It's been a while since we chatted about it here on the show. It's intriguing. There's a lot of different alternative ways to really measure volatility, measure sentiment. The MOVE index is one of them. Mr. Rock Lobster, are you a big MOVE fan? And then B, what else is catching your eye out there in a topsy-turvy week for vol, sir?
The MOVE index is what? Isn't that the vol and rates and stuff like that? I'm not totally familiar. I'm not familiar with it. I mean, I know one of my bond guys looks at it, but I guess I should look at it. But I don't, because I'm just a one-dimensional volatility human being. So I have very, very little ability to branch out of my silo. But I do have Bill Griffo, who probably should be on your show because he's really good with this stuff. He follows it a lot, and he just basically tells me when I need to look at it when it's doing something. But as far as vol goes right now, I think, Bostic said, and what I'm trying to wonder, do these Fed guys actually ever meet and discuss?
I was just going to say, when I saw him running off in the mouth, I knew you were going to have something to say about this week.
So 2 weeks ago, Bullard says we got to go higher.
You love when B-named Fed governors chime in with their own thoughts.
And then this guy comes and said, well, it's likely we could pause this summer. Are these two guys working for the same dude? Like what? What? If they were doctors, right? That's like the body is open and they're trying to sew like the thing in the heart and they're arguing about it while they're doing it. Like, aren't they supposed to figure out the strategy and then go out with a message? I don't know. I'm just confused. I'm just a humble, I don't have a big Fed brain for all this stuff. But you would think they would try to get on message. If their message was like, we're keeping rates up there until inflation is, I think people could cope with that. Or if, hey, it's not as bad as everybody thinks. I think people, but this like every 2 weeks, it is anyway. So, but you put that into the market, and I swear to gosh, it is like dangling crack in front of a crackhead. We were 3,900 yesterday, 30 whatever, and things just looked terrible, right? The sentiment was terrible. Nothing was good. It all sucked, right? Like, okay, we're stuck in this environment for a while, oh no. And I swear I'm looking at it, and I even closed some vol puts yesterday, and it was painful to close them. It's like I'm closing them. It was just to cap off a position. It was just a very small win. But I've had 2 cycles where these stupid Fed presidents, governors, whatever, come in and screw up you're rolling into like a lower vol and boom, and like, okay, I'm not letting these jerks do it again. So jerk, right? So the jerk guy, Bostic, comes in and says the exact opposite message that the other guy said. Like, oh my gosh.
So
I'm glad I didn't sell all of them is all I can say.
It sounds like
bitter.
Maybe you're talking your position, which I have been known to do. And I am by no stretch of the imagination a real Fed guy. But I think about, like, Andrew, you come from Group 1 days, right? And
Yep.
you've been on trading floors, and you could work with, say you're part of an index group where different people within the group could have different inclinations. And I think these guys just look at these as their opportunities to get their name out there. Like, I don't even know, is Bostic a voting member this year? I don't know. But the Fed talk and the importance that some people place around it these days, I think might be overblown. But the way it can swing markets from 24 to 48 hour periods is somewhat remarkable. So I'm just being a devil's advocate there. I think these are generally smart people. And they like to get their name in the news, just like any of us might, for good reasons.
I can see that point of view, but right now I think it's not as, from a policy point of view, like okay, I guess one guy wants to go on record as the hawk and one guy wants to go on record as the dove. Yeah, but I'm totally pissed, right, that they cost me a bunch of money by doing all this stupid crap. But again, it's my own fault. I could have closed them earlier, of course. But what is amazing is how fast we rip on the notion of this. And that's still, I think, quite amazing. Like, we certainly have been, like, slowly going down, but how fast we erase all those losses when they just whisper, pause, that's what I find amazing, how fast we get right back to that level again.
Totally agree with you there.
Yeah, it is fascinating. And I think I agree with Kevin on that front. These guys do like to get their name out there. There is a little bit of politicking going on. They all want to be Fed chair someday, right? So they get to go out there and speak. As I've said before on the show many times, I hate this stuff. I'm with you, Andrew. The myriad voices coming out of the Fed has always driven me crazy. The Fed should speak with one voice. That should be the Fed chairman. If these guys want to have their say, then hey, you have the minutes, you have the meeting to make your voice heard. So you have opportunities there. But beyond that, you're right. Get on message. The Fed has a plan. Powell should be out there telling people about it. Everyone else should probably keep silent. I get it. That's not how the world of politics works. And if you want to be the Fed chairman someday, you got to get out there and make some noise. But we're in the most Fed-driven market ever. As Andrew alluded to, any little whispers out there from anyone, even remotely related to the Fed, is going to send this market either into a tailspin or into just a dizzying rally. So these guys should probably have a little bit more caution with their words out there, but that's not the case. They are politicians at the end of the day, and caution and politicians tend not to go hand in hand. Let's see what kind of caution, or perhaps lack thereof, we're seeing out there on the volatility surface this week. And looking here at the old VIX futures curve, we're seeing things, as you might expect, listeners, coming in a wee bit, or in this case, a lot of bit. The March future, when we kicked off the show, was down about 3 points. The April future playing a pretty good game of catch-up, down about 2.35 points. So that front portion of that curve really coming in. We talked on the show last time how the front portion had been bid up, but also how the curve had shifted up. We're seeing a lot of that getting just eliminated across the board here, as the entire curve has pretty much shifted right back down in the front portion of the curve. They are just whacking it in the head with a stick. They are killing it. Mr. Kevin, anything catching your eye out there in the volatility surface this week, sir?
You covered it fairly well. The whole term structure moved in, even the back end of the curve. So I'm talking about, like, what am I looking at here? September futures in a full point about, you saw a big move across the surface. I'd be surprised to see that continue over the next couple of weeks. I tend to think we're range bound. I'm not a huge moving average guy, but both the S&Ps and NASDAQ 100 are kind of vacillating between their 200-day simple moving average and exponential. I think it's a trading market, not a trending market, and I continue to feel that way.
Mr. Rock Lobster, same question for you, sir. Anything catching your eye in the rapidly vanishing volatility surface?
I agree with Kevin. Like we don't. This is like the bottom of the range for us. We don't go lower than 18. We keep having this orbiting market with these higher intraday spikes. It's like, and I think we're probably down a little more. Today's Friday, but for vol to go below 18 at this point, I mean, you got to get the Fed governors to shut up, basically, because every time they say something, we're going to launch 2%. So it's been very hard for vol to go, south at at this point. So you look at what we have, and I would say the curve is starting to look. Today it will look a little more normal. VIX will mark up, of course, on a little bit on Monday, but you have this sell-off in vol to basically once again is a relatively low level, and you have a non-farm payroll number on Friday next week. You have the CPI on the 14th, and then you have another FOMC meeting on the 22nd, right? And they're taking the vol down now, mostly because we're having a pretty decent rally in the S&P 500. So, like, it would surprise me if we saw a whole lot lower than 1825 next week, because they're going to still hold the vol for all the expected events. So, is this a good time to dump some vol puts today? Yeah. At the end of the day, I'm definitely going to sell some one way or the other, and take some bucks and be happy about it, and not be too grumpy. But I'm going to end up with a lot of upside for nothing. Basically, I think that's all going to go out worthless. But I think that's what we have as far as vol goes. Now, can the S&P go up another 2-3% next week? It wouldn't surprise me at all if it got back to like 4,100, just on the hope that Boston, everybody's like, okay, well, or whoever, now I have to look. I've got on my calendar now. Every time a Fed guy says something, I'm like, okay, well, we could have kind of a move here, so I should pay attention. So I think with that, but I think it's hard for vol to go down. The only thing I will say is realized vol is the lowest it's been in 7 months, 8 months. So we have this thing where close to close, we've had relatively kind of benign action, like if you're measuring it that way. But from a straight straight market moving around, it has been relatively quiet since the beginning of the year. Like we're at I'm going to say as low as we've been in the last 2 years, realized vol rise right now. So that probably means something's going to happen. I don't know what's going to happen, but stocks tend to rally when realized vol is lower because you have a little bit more relaxed. Everybody has a little more confident what's going on. Maybe, and what I would say is maybe there's some confidence now that 3,900 is kind of a relative low, and that's enough to keep the market from falling apart. So I would say it's not from again, vol point of view, realized vol super low. And at this point, implied vol is going to adjust somewhat to that lower vol. Last year, everything was in the mid 20s for pretty much most of the year from a realized vol point of view. And we're steadily staying under that right now. So, I mean, but I think as Kevin said, like those drops in vol now from this level are hard won. Like we need 2 weeks of not much happening to get kind of to the next level. And we just haven't, we haven't had it yet for a sustained period in the last year. So Kevin, I'll let you take it from there because
The only thing I would add, I think those are all salient points, and I can't take credit for this little tidbit. It came out of Susquehanna, but and Susquehanna thoughts aside, the VIX index, the past 7 straight trading days, the index moved less than the S&Ps, which is highly unusual. So the implied vol has remained relatively firm. But to Andrew's point, I look at average true ranges. So you are incorporating with that measure the intraday moves, and looking at the S&Ps, it's down to very near 50 in terms of ATR on a 2-week basis. You have to go back to the very beginning of 2022 to see measures that low. And then when I look at the same measure applied to the NASDAQ 100, you have to go back to November of 2021 for intraday ranges, average true range measure over a 2-week time frame for moves this low. So you would need to see, or I second Andrew's opinion about, you would have to get another 2 weeks where we are not seeing significant intraday or close over close volatility to see forward vol measures move back to, I don't know, like almost pre-pandemic levels.
Let's see what we're seeing out there on the vol options front. Let's kick it off in vol Q land. Remember the at the money vol of the NASDAQ 100. Let's look at the top 5 for vol Q options this week. Number 5, we've got the March 25 puts. Number 4, we got the March 24 puts again. So somebody likes that put vertical out there. It's been open for a little bit. Number 3, we got the March 24 calls. Number 2, we got the March 22s. And then rounding out the top 10 yet again, we got the March 18. Somebody likes those out there as well. Maybe a little bit of a flavor of the in the money paper we were starting to see on some other products out there like spikes. Let's get on out to the land of the VIX options. And we were saying, post-Fed, it seemed like VIX options had really shifted into another volatility and volume regime because they were putting up some numbers. And that's reflected in the ADV. Until this week, we kind of saw a bit of a quiet start to the week. We didn't see a lot of VIX paper hitting the tape. And as a result, the ADV has started to come back down. It's back to about 660,000. That puts it down about 30,000 contracts on the week. Still frothy, still about 160,000 contracts north of where it was heading into the Fed announcement. So it's still up from there, but coming back a little bit this week. They can't all be banger threatening 1 million contract days out there, listeners. Even though today looking decently robust from a volume perspective, as we're kicking off this segment, about 534,000 contracts on the tape in VIX today. We'll break down all that paper in a second. First, let's get to what's open out there. What are these size positions in VIX options right now? And if you're looking for a put, the Rock Lobster was lamenting earlier having to sell his puts. If you're looking for a put in the top 10, there's only one to find, listeners. And it is right here at number 10, 166,000 of the March 18 puts. And that's it. The rest, all calls all the time, listeners. Number 9, we're right back at it, listeners. 168,000 of the March 80s. Just those two, number 10 and number 9, two differing opinions in the world of vol. The March 18 puts and then the March 80 calls. Again, reflecting just how much fun is lurking out there in the VIX size positions. Number 8, 193,000 of the March 25 calls. Number 7, 234,000 of the May 50s. Is that our old friend 50 Cent out there, or someone's open for size on that strike? Number 6, 238,000 of the March 26s. Number 5, right back up there, 243,000 of the March 75s. Number 4, 251,000 of the March 24s. Number 3, 280,000 exactly. Don't see that too often of the March 30s. Number 2, 297,000 of the June 40s. And rounding out the top spot yet again this week, listeners, 308,000 of the June 30s. It's that much beloved / maligned June 30-40 vertical. I know when we had the once and future Dr. VIX on the show a few weeks ago, he was not a fan of that. A lot of people could take issue with longer term verticals in general, VIX or whatever product you want to look at, not really being the best way to capture the upside. But nonetheless, someone has done it to the tune of about 300,000 contracts out there. Like we said, today, a decently active day, about 534,000 contracts on the tape, including, speak of the devil, looks like our friend is back out there in VIX today because looks like we have 109,000 of the June 30-40 vertical going back up out there today. I wonder if he's maybe getting the heck out of Dodge on some of that. Looks like he might be. Looks like it went up 71 cents. He may have dumped that bad boy out about 104,000 times to start the day. Either way, number one and number two today, listeners, are the June 30s and the June 40s, both with 109,000 contracts. So that's probably to blame for the decent day. I was kind of surprised when I looked at the volume numbers, just how much paper was going up today. And that vertical would account for a lot of it. Number three, we fall off quite a bit, 50,000 of the March 30s. Number four, 27,000 of the March 18 puts. And rounding out the top five today, 26,000 of the March 20 puts. Yesterday, kind of talking about those anemic days, yesterday was certainly one of them, 347,000 contracts on the tape. The big dog, such as it was, 29,000 of the March 30s, followed by 24,000 for number two of the March 20 puts. Number three, 24,000 of the March 25 calls. Number four, 21,000 of the March 35 calls. And rounding out the top five on a pretty anemic Thursday, we had 18,000 of the April 18 puts. Wednesday said, hold my beer, kid, only doing 327,000 contracts. So another light day. I think that was the lightest day of the week. Yeah. Wednesday, the big dog, 22,000 of the March 30s. March 30 is pretty active all week long. Number two, 20,000 almost exactly of the August 55s. So the AUG doubles going up on Wednesday. Number three, 16,000 of the March 19 puts. Number four, 15,000 of the June 20 puts. And rounding out the top five on Wednesday, 12,000 of the March 18 puts. Off to Tuesday, a little bit more paper, but not much. 365,000 going up on Tuesday. The big dog on Tuesday, 24,000 of the March 25s, followed by 21,000 for number two of the May 32 halves. Number three, 18,000 of the March 30s. Number four, 16,000 of the March 20 puts. And rounding out the top five on a fairly light Tuesday, we had 15,000 of the April 20 puts. Monday, kicking off the week with 430,000 contracts. The big dog on Monday, 31,000 of the March 18 puts, followed by 25,000 for number two of the March 19 puts. Number three, 22,000 of the April 32 halves. Number four, 20,000 of the June 19 puts. And rounding out the top five on our kickoff to the week on Monday, 19,000 of the March 65 calls. Mr. Rock Lobster, we'll start with you. Anything catching your eye? And have you had a chance to get any more color on this June 30-40 that went up for size today? Do you think they are unwinding some of it, sir?
I mean, as far as I thought, there was a lot of like sporadic action and like some of the March puts, like 18 puts today, 22 puts today. I don't have any particular color on the June, sadly, but I mean, so is this, and this one was like a straight call spread? I mean, my guess would be that they would be adding more unless I'm totally wrong. I don't know. Did you get some Flowmaster impetus on this? But
it went up looking like a sale. That doesn't really mean anything. They could have done it tied and a bunch of different things. You're right. My first inclination is they probably would have been adding more too, because it's a strange time to be unwinding your vertical now. But
right,
we've seen crazier things.
Like I know, and I think if they're unwinding a third of it, right, because there's 300,000 open. I mean, if they're unwinding a third of it, that's not. That's like, you know, they're kind of giving up, sort of, you know, like, okay, we're going to take our June hedge and we're going to go away and, you know, hide under a rock. So I would be surprised if they're closing it, because there's no way they made money on it in any way, shape, or form.
No, they took a bath. Yeah.
So I think to me, it's kind of an odd close as that goes. So that's what I would say there on that. But the fact that is, you know, that is a piece of paper going up like that. Maybe it is somebody going out, but I have seen a little bit more scattered March put action. And I have to say, the fact that all of these Fed meetings are exactly on VIX expiration is so diabolical, in its
another reason for you to hate the Fed.
Well, I realize they have a hard job to do, but sometimes when they do stuff where there's the common sense just totally leaves the room, I'm like a little shocked at the bubble that they live in. But of course, they have very nice wood paneled offices, and they fly around and talk and do some grandiose stuff. And they move markets a whole bunch. But yeah, I mean, it's classic though. It's right on. It's always on expiration. Like they got how many? They got another 30 days a month they could choose. Yet they always choose VIX expiration. So I find it funny sometimes. Let's just say I find it a little funny.
Maybe it's Fed governors putting up all these zero DTE
That's who it
options.
Is. That's who's driving it.
If you know what your policy is going to be, I'll bet you it's a lot easier to trade that zero DTE stuff.
Indeed.
There we go. Now we have the reason behind all these millions of zero-day contracts. We're going to get to zero-day in a bit. I got a feeling it's going to be an interesting discussion point. But Kevin, anything catching your eye in the world of VIX options this week, sir?
Well, just going back to a point you made and the fact that Russell, Dr. VIX, has done some consistent work around some of the activity like this that you're describing in the VIX options complex. For anybody that follows him on Twitter, there was a bit of a scooter accident this week. You should extend your condolences. I was told he's in concussion protocol and catching up on a lot of podcasts because he's supposed to be not on a screen. So he's probably going to be listening to this, if not live, very soon. Beyond that, when I fall in and I might have mentioned this a couple of weeks ago, I fall into the Dennis Davitt camp, the other Davitt, about overanalyzing some of these big vol spreads because absent an understanding of what the motivation, what else is behind that position, could be hugely long equities, could be some OTC transaction that they're offsetting. Absent that, reading too much into this spread being added to, coming off, I think can be deleterious if it's then rolling into the trading that you do for your personal account. Hopefully that makes some sense because there are a whole lot of interconnected moving forces in capital markets, and you don't want to make too many, mountains out of molehills. That is it.
I think they heard the show where we threw some shade at their vertical. And they're just said, okay, you know what? We're just going to throw the towel in. They don't like it on vol views. So they're unwinding their massive 30-40 vertical out there. I did see the photos of Mr. Rhodes out there looking all banged up. So our thoughts for a speedy recovery out there to you, Mr. Rhodes. You probably are listening to this. So I'm sure you'll be sending your feedback in now about all your thoughts on all things June vertical. But Kevin, you brought up zero DTE. That kind of gets me something else I wanted to talk about here on the show this week. We actually have a pretty interesting question of the week. We were talking about this a little bit last week. I could talk about it every week. It's kind of the $1 million question right now in the world of volatility, in the world of markets, the world of options, is what are some of the unintended consequences of this massive explosion of paper focused at the very tip of the spear, the very front portion of expiration on expiration day itself? We always know whenever liquidity migrates around the curve, there are unintended consequences. So what are those for this? And one of the ones we've been debating for a while, we put it to you this week, listeners, quite simply. Is the zero-day explosion in SPX, is it increasing intraday volatility? We had, before I get to the results, we had Jay Soloff on the show last week. He chimed in on our poll saying, I don't think it's impacting the VIX based on the 30-day implied volatility, but I imagine it has to increase intraday vol on days and in names where the action is mostly one-sided. Again, I'll reveal the results of our poll in a little bit. It is still active. I think you got about an hour or two left. So those of you listening on the podcast, it'll probably be too late for you. That's why you got to follow us at Options throughout the week to make your voice heard. But Kevin, we'll start with you. Your buddy Jay chiming in already on our poll. Where do you fall on the whole zero-day phenomenon? Is it increasing intraday volatility or not?
I would likely skew toward Jay's thoughts in those situations where you see considerable open interest. You can see options act as a magnet or repellent. In those cases, that has been the situation, I would argue, for many, many years, whether it was the third Friday, weeklies, or now even shorter duration, shorter tenured options. So I don't think that that's too much of a stretch to believe. I think big picture, the implication is what you're seeing. Volume has become front loaded. And I read something earlier this week that the size of open interest outside of the front month in the S&P complex is now the smallest it's been in many, many years. I think from an options user standpoint, that more people will come to understand that gamma element and the decay element of options. But I wouldn't extrapolate too much. Like, you need to learn from that and then understand that the further out in time you go, the less impactful that is. So long as whomever is in the aggregate, that people are learning from this experience, I think it's a good thing, because more options, volume, a broader user base is something I advocate for, so long as it's informed use.
Mr. Rock Lobster, we were chatting about this yesterday. You fell on the no side of the spectrum. Is that still your viewpoint? And if so, why, sir?
So I think we said this yesterday about like market impact, right? And I think what mostly it does, I think Kevin just is like, it's just stealing, it's taking liquidity from other stuff. Like, I when you think about it, it is, you can't think of a more perfect product to trade where it's almost like they have those binary options that, they're kind of, they're either in the money, out of the money, and they have that weird payout. Or I know there's that the Nadex exchange I think that's still going, right? So now all of a sudden you have SPX, and you basically have, it's not a binary option, obviously, but you do have that, that cash settle. So you don't have to worry about settlement. And I think it's the perfect option. What I predict, right? And here's my prediction, is that they will start to have daily cash settled options in equities within a year. So you'll see like an Apple or a Tesla or the top, whatever name gets hot, and they'll start having cash settled options, and they'll do one day to expiration. So that's my prediction. And gosh knows how much oxygen that will suck out. But I think overall, the only trend we have seen, Mark, since we started, and I laugh at this all the time, but and I say it to my students, like a volume on a daily, on a weekly Apple option at the money was more than my whole exchange traded when I started. The whole Pico's floor. And that's only one strike now. So I think, things that drive volume, as long as there's good transparency, and the clearing function works, I think overall is good. As far as people kind of getting into trouble, I think that ship has sailed. The weeklies have been around now for several years, almost a decade, probably, 7 years, something like that. So I don't think that really is a problem. Also, cash settled is not a problem. I mean, you can get stung for sure, but you trade a spread cash settled, how much trouble can you get into? So I think overall that options were invented a certain way many moons ago. You had stocks. Their best idea was to come up with an option that settled to the stock, and all the cash settled stuff, happened later. Like the OEX, which started everything, and was really kind of the first, like what I call mega product, in the 80s. And now, you're starting to see the exchanges. Now they're all competing. Like, okay, it's going to surprise me that one of these 500 exchanges that we have does not come up with a cash settled daily Apple option. Like, these things are going to happen. And as soon as, the hardest part is the OCC and everybody else clearing them and trying to figure out how to do it. But like, I don't see how it doesn't happen at this point. Nobody is looking at what's going on in the SIBO and saying, wow, that's a bad idea. We shouldn't do that. I think it's inevitable. So everybody should just buckle up and get ready. Because if there's one thing that we know about this industry since I've been doing this for 30 years, is that, hey, it's another week. Something's going to change. We would have never predicted when we started, Mark, that there would be no floor traders anymore, or essentially there aren't any. And that all the floors would shut down, basically. That was not on my bucket list of things to happen when I was trading. So, but it's happened, and you adjust. But I think you're going to see a lot more. I think you're going to see a lot more cash settled options, and I think that's the magic wand, so to speak. It's just like VIX didn't take off until the futures, started trading, and there was an underlying. And it's just like anything else. You need that extra thing to make a product a killer product. And I think, in the zero DTE realm, I think the cash settled is the magic formula on it.
Andrew calling for cash settled Apple options within a year. Kevin, take that back to your folks over there at NASDAQ. See what they can work up for us.
Yeah, I'm going to steer clear as an exchange rep of whether or not that might be in the pipeline. But Andrew, you make such good points about how forward-looking, how flexible the industry has become and how it's been demand-driven. Going back to kind of the original question, if I'm somebody that likes to trade markets actively and I look at the number of tools in front of me, I think from a big picture standpoint, the zero DTE exposure, the cash settlement, which is across the board on index options, so that includes your NASDAQ 100 complex, and people appreciating that style. But if I were a futures trader and I can now use these cash settled daily index options, I might move some of my exposure that way. I don't believe that there's been any meaningful tick down in futures volume, but I do think that could be one of the sort of tangential impacts over a long time frame.
Funny you say that. I have a data point just along those lines. But first, before we get there, let me pay off what our audience thinks, because at the end of the day, the audience, you folks, are the ultimate arbiters of all things going on in the world of options and volatility, listeners. And right now, you are agreeing with me and Kevin and Jay, and you're saying, the heck with you, Rock Lobster. 60.8% of you saying, yes, they do increase intraday volatility. 39.2% saying no. Like I said, about a couple hours left. So if you're listening live, make sure you voted. If you're listening after the fact, I think you missed the boat if you haven't voted already out there. But you mentioned the futures, Kevin. That was the other point I was going to bring up. We just got the numbers from our friends over there at OCC this week for February. Was February a banger month? The answer, yes. 887.6 million contracts, up nearly 10% from February of the year before. Also, the busiest February in the history of the options business. So that's saying something out there. A lot of other things were interesting. Year-to-date ADV up 6.2%. That's a explosive month. So looks like we're on pace for another record year, listeners. But if you drill down a little bit, you get past index options up 46%, ETF options up 12%, total volume, like I said, up about 9.9%. There is one little data point that stood out to me, Kevin, and that was the futures cleared by OCC, which we know are mostly VIX futures, were down nearly 17% yet again after coming on the heels of January, where I believe they were down somewhere close to 30%. So a rough start to the year for VIX futures, Kevin. I'm curious if you think maybe this is one of those unintended consequences I was talking about, folks shifting their liquidity out of the futures and into zero day, Kevin.
So in my mind, I'm thinking more if I'm somebody that traded mini NASDAQ futures or S&P futures, that I might prefer my risk reward profile in some zero DTE options the impact on the VIX future side, which is an arena when I worked at SIBO that we would focus a great deal of attention on, I think is generally more tethered to AUM and fund flows in the ETF and ETP products, which you're seeing volatility kind of not behave like some people, or forward volatility estimates not behave like some might expect throughout last year and perhaps even into this year. And so I'm not shocked to see that, but I'm not drawing a parallel necessarily between 0 DTE and VIX futures volume. I would think more on the CME side and longer term.
Yeah, I think there is a clearer line to be made, a clearer distinction, of course, on the S&P side versus VIX, but something is indeed sucking down the old VIX futures. Mr. Rock Lobster, what do you think? Do you agree with Kevin, or you think maybe the 0 day is starting to wreak havoc with VIX futures as well?
Again, I'm not totally sure there, but it's hard to beat the immediate hedging function of a 0 DTE option. I mean, so I can't help but there will be some siphoning at some point, but I think the biggest problem is just, we have been in one vol zone for 2 months. We haven't broken above 23 and we haven't broken below 18. And I love the Thompson boys. Their mantra about trading VIX as a product. Like you make money below 16, you make money above 20, right? You need that move. If you're stuck between those two numbers for 2 months, nobody's making anything trading those things. So I think that, people are more savvy now as well. Like they're just not, you don't see things moving around and you don't buy them. I mean, that's why VVIX is, I would never, ever in a million years, right, think you could buy an April strangles in VIX for what you can buy them for right now. Like strangles that are really around the money, like a call spread and a put for like $2.50 with 6.5 weeks to go. And I'm talking like the 20 put and a 21.31 call spread. Because I'm pricing those right now. And I'm trying to I want to buy as many of them as I can without trying to be too giddy. But I mean, you're looking at pricing now of the 20 puts $1.48, and I can buy the 21.31 call spread for $1 that's $2.70. Like $2.70 for a 21.20 strangle, essentially, like sitting at the top, like in the, that's essentially saying we are not moving at all anywhere, and the thing pays at a 17. So like there's, what Kevin was saying about all the, the forward vol expectations, like the way that we've been moving is so bizarre. But it also says like there's no rally in VIX. Like it can't, like vol can't rally. So you look at that thing and you shake your head and but for me, I just got to go, okay, if I see all-time low vol like that with VIX this high, I got to buy it. And I take my lumps if I'm wrong, but this shit is cheap. Sorry, I'm cussing on the radio, but it is some cheap stuff. So, there's always a reason that pricing is like that, but end of the day, I'm going to lean a little long VIX and buy some more strangles. I can't help it. But I when you see that kind of pricing, but it's also reflective of what's been happening as well. And what Kevin and I were saying earlier about, we need a little bit longer of a cycle of lower realized fall. But if we get that over the next 2 weeks, how low are we going? Like how low could maybe see a 15 or 16 handle, and then all of a sudden those strangles look pretty good.
Speaking of all things 0 day, right before showtime, Mr. Scott Nations, the creator of VolQ, he knows our show schedule, and he tweeted out that he's introducing the nation's 0 day Voldex. So he's going to start crunching those numbers. He says it's still in a work in progress because things get really odd during the last hours of the day, which, they are kind of quasi-binary, so that does happen. But he says, but tell us what you think. So check him out if you're not following him on Twitter, listeners, at Scott Nations. something I'm sure we'll have a chance to talk about the next time he's on the show. But now it's time for us to keep on rolling into the most difficult, the most dangerous portion of the show, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And we haven't seen a ton of vol evolution over the course of the show. You know, I was hoping for a little bit of a rally in the vol, listeners, not to come to pass for me today. I was at a 21 double in VIX, so I still had a 20 handle. And no joy for me, 1886 or so right now in the cash. A vol Q, so the at-the-money vol at NASDAQ, I was at a 25. Still dialing that one in a little bit, listeners. It's at about a 23.5 right now, so no joy for me there either. The meatball was just going upside all day. He was 24.42 on VIX, 28.82 for Vol Q. So no joy for him. Jay Soloff, our guest from last week, he was at 19.75, so a little closer than me, but no joy for him on VIX. Vol Q, 24, excuse me. So he's about half a point away on Vol Q. And then, Kevin, you were at a 21 even on VIX, so no joy there, and a 24.5, about a point away on Vol Q. So all that a long way around to saying no winner chicken dinners for us. Quick scan here. Our producers will go through the full list of all of our listeners to see if anyone had anything close here. I see a bunch of 26 handles. Oh, those are Vol Q. Give me Vol Q first, producers. That's what's throwing me off. I was like, 26 handle. Wow. All right. So a little bit closer here on VIX. Still mostly 20 handles. I don't even see any teens, but they'll go through it with a fine-tooth comb, listeners. And if you're within a tenth of a point, our margin of victory, you too can win fabulous prizes. All that a long way around to saying, Mr. Meatball, I should say Mr. Rock Lobster, you were not on last week. You did not have a chance to lose, so you got to go first this week. What are you feeling for VIX and Vol Q, sir?
I'm interested to see what Kevin says, but I can't scum him, obviously, if I have to go first. So I'm going to say, because we have that non-farm payroll number, and everybody will get excited and come back. Like, I'm going to just stick with the trend we have here and see, I'm going to say 1828.
And what do you got for Vol Q?
Oh, Vol Q? Oh, dear. Let's see here. Is that that's a NASDAQ vol. Wow, it's hard for that really to go down. I'm going to say 22. I'll say 22.99 for Vol Q.
22.99 for Vol Q. And tell you what, Kevin, I will give you pride of place. You get to go last. You get to scum us all if you like here, because I will go next. I will dive bravely into the fire. I have been feeling more upside on vol of late, or at least less downside than a lot of these guys have been feeling. We've got the non-farms next week. That does kind of throw a wrench into. We can get another one of these surprise numbers and everything's off to the races again, or it could be just a lot of the event vol coming out of the market. So it's kind of hard to see a massive case for a lot of upside in vol next week. Again, barring some real crazy surprise on non-farms. I'm going to say 1956 for VIX, so a little bit more juice, but not much. And then good old Vol Q. Let's see. I was at a 25 even this week. We're at a 23.5. I don't hate a little bit extra there. I'm going to say 23.89 for Vol Q. All right, Kevin, feel free to scum away, sir. The floor is yours.
I love the way you guys set that up with the scumming. This is gonna be a clustered pick this week. I think we're gonna see a very similar landscape a week from now. Maybe vol holds up on a relative basis into the number, comes back out again. I'm going 18.5, nice round numbers on VIX. I'm going 23 even on VOLQ. I'm out.
There's your market for next week, listeners. Hit us up in the live chat if you're listening live with your predictions. And of course, if you're listening after the fact, get them in quickly so you too can win fabulous prizes. All right, listeners, that music means we are done with all things volatility for this week. If you're listening on demand, that will conclude your broadcast week with us. Thank you for joining us. If you're on the pro side, stay tuned. We'll be back in a little bit to break down the week that was from an unusual activity perspective. Let's get weird. Let's get wild. A little bit of the old options oddities. But before we go, Mr. Rock Lobster, sir, folks want to check out everything you got cooking in the land of vol. Where should they go? What should they do?
Yeah, go to optionpit.com. Also, I have a presentation on Money Map Press on Wednesday at 8 p.m. If you want to learn how to trade this kind of what we'll just call a hedge strategy, I'll be introducing it over there. So for people that are new to hedging strategies, you can check it out there for income style trades. But yeah, 888-TRADE-01. That option pit is still home. So give Andrew or Ted a call. And if you saw this show and you want some of our education products, you get 10% off by just saying, hey, you heard the show.
There you go. 10% money in your pocket. Speaking of money in your pocket, Options Queen in our chat. She's got a 17 handle for VIX next week, 1790. She's usually pretty prescient, so interesting. She's getting in on the old fade. A bunch of guesses coming in. We'll get them all calculated for the show next week. And Mr. Kevin, as the holder of all options content over there at NASDAQ, what can folks look forward to on the options content front from NASDAQ?
Just going to say I'm sad I can't offer any discounts. I will point out that if you clear as a customer, NASDAQ index options do not have a surcharge. So find out how your orders are handled. That's not the case across the board in the index landscape. I would point out that I'm doing a webinar with our friends at Thomas Petterfee's group next week. We're going to have on Invesco and part of NASDAQ's research group. You're going to see a lot of Invesco commercials coming up because it's March Madness time. I'm very excited about that. And if there are advisors that listen to the show, which I'm sure there are, take a look at NASDAQ NDX Connect. There's some cool tools for overlays for strategies. That's with our partners at Volos. So I thank you for the opportunity to be here, Mark. I enjoyed it, Andrew, and I look forward to coming back again, back to back to back to back.
There you go. Keep the streak alive. Check out all that great stuff over there at NASDAQ.com. We know there are advisors lurking. We just did our advisors options show earlier this week with Matt from Orats and some other great special guests. So there's a lot of advisors lurking in the audience as well. Like I said, that is going to do it for us here on Volatility Views. Also going to do it for us on the on-demand side of the network. Thank you for joining us this week. Have a safe, a pleasant weekend, and we'll see you back here next week. Another episode. Volatility Views.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.